Hi, we're here at FIX EMEA in London, and today I'm speaking to Laura Kraft, who's co-chair of the FIX Protocol Post-Trade Working Group, and Terri van Praagh of Northern Trust. So, post-trade, this is the first year that post-trade has been part of the FIX EMEA agenda. So, Laura, why is post-trade such a big focus right now?
We've seen a renewed interest in looking at the FIX protocol in the post-trade space for allocations and confirmations, and that's really been driven out of big US buy-side firms. The likes of BlackRock and Fidelity and Wellington and Capital have been looking at FIX protocol and saying this actually makes sense from the way that we do our post-trade. So they've started to adopt new industry standards, and that's coming over to the European region. So very recently FPL, FIX Protocol Limited, set up a post-trade working group, and based on that I think there's a renewed appetite to really share some of the agenda items amongst a much broader audience and understand what are the drivers around cost reduction, risk reduction, etc. And I think that's really been part of why FPL decided this year to put post-trade on the session, which has typically been very much a trading conference, but recognise that from now that it's not just about trading, but FIX is actually being used in the middle and back office as well.
So Terri, you mentioned on your session today that the industry had an obligation to make T+2 work. How likely is it that T+2 will work?
I think it will. I think we have to make it work. There's no reason operationally why it shouldn't work. What we have to do in order to make it work, though, is to try and work smarter and make sure that we are confirming and confirming trades further up the food chain, so nearer the point of execution. What we don't want is to exchange that counterparty risk with operational risk, which means that we have to start working towards more initiatives around the confirmation arena, which FIX will do. That's more at the point of execution. At the minute we have far too many people involved in that post-trade confirmation piece, and it's farcical in a way. So this is something that's been around for a long time, and I think, judging by the attendance as well at the session that we had, it's very encouraging to see that people are looking at the post-trade space in terms of a front office standard, which is what FIX is.
So you mentioned this sort of farcical operational environment. Will we continue in this farcical way if T+2 doesn't happen?
Yeah, if it doesn't happen, then we are again still looking at extended counterparty risk. We're looking at markets that are still moving pieces of paper around rather than confirming things electronically. That's not where we want to be. It's not where we should be. You know, we're in the 21st century now, and we're still talking about faxes and telephone calls, and that's really not what the market's about. We are looking to be more efficient, and especially with counterparty risk and risk appetite being really, you know, high on the agenda for the regulator as well as for every individual firm. It's something that needs addressing, and it needs addressing with a new initiative, not just automating the current processes that we have. So I think FIX and again the attendance that we had is showing that we do have an appetite to move the market into a different direction, and T+2 is just a start, really. You know, eventually we should move to T+0. Whether that happens or not is another matter. There's too many cultures and too many vested interests really to move us to that in the next few years. But I think T+2 is a start.
I mean, yes, of course. I mean, a T+0 was mentioned by the audience at your session, you know, and to balance that with also comments about emerging markets where you're often dealing with paper and telephone or fax. So, you know, knowing this from a global perspective, Laura, is T+0 really just a pipe dream?
I think it needs a paradigm shift in the industry to make it happen. From a technology perspective, it's achievable. The technology certainly around today can certainly make it a reality. But whether, as Terri mentioned, vested interest, whether just thinking outside the box and trying to automating manual processes is not going to get the industry to where it needs to be. It really needs a paradigm shift, and I think it just takes a few enlightened individuals to really help make that happen. And you've seen the move to FIX is a start. That's changing current processes. It's changing the way people think about confirming trades in a much speedier fashion, more upfront in the food chain. It's a start, and I think that there's no reason why in with the right attitude and the right technology, there's no reason why we couldn't get that in some markets.
So how about for domestic markets? I mean, could T+0 be achievable in the EMEA and the US?
Yeah, I mean, if you're looking at trades that are non-cross-border, it's absolutely doable in today's environment. It's not ideal because we still have all these vested interests, as we've been talking about. There's still a lot of people that earn a living from the post-trade confirmation space, me included. So there are a lot of people out there that are earning a living from the inefficiencies in the market. So whether we would get there sooner rather than later, I don't think it will happen. But T+0 in a domestic market is achievable, and we do that today. In some instrument types, we can achieve T+0. It just depends on a number of things. We need the FX market to move from T+2. That's not going to happen overnight. We need cross-border to be truly cross-border and not individual markets acting in their own interests. So I think, as Laura says, it needs a huge shift. Otherwise, we'll just end up automating the manual processes that currently exist.